What's up, folks? Heine's Morning Update, September 19th, Monday. We're starting off the Monday sad. We're down 38.60 right now. Again, this is DEES ES futures, not SEP anymore. So there's going to be a difference between this number and SPX. It should be 18, 17, 18 at this juncture. Anyway, 39.05, 39.08. This level, that's basically my over-under. Anything below that, we're going to remain bearish. If we can get above that, then we can start to look at numbers up above. But right now, it's kind of in a sad. The market's sad right now. A lot of hype this week. Wednesday, Fed. Odds are rising that they do a full point, which would be crazy. In retrospect, I think they want asset prices down. I don't think they care about the market. So I think that they're going to be aggressive. I wouldn't be surprised to see if a point, will go lower. 3/4 at this juncture would probably be bullish, depending on how far we go down the next 2 days in anticipation. But they also run the risk of them ramping this up prior to Fed Day. That will allow managed money to get into cheap options on the downside for a full point hike down. So just remember, they play games, so this might not make sense. Anyway, 39.05, 08, really that level is my line in the sand. We need ES above that for anything bullish. As of now, we're bearish. Now to get levels, we got to come all the way back to June, or July. No, June, July. Anyway, the next major again is the one I was watching was 38.40. 46 is our low on the overnight. That 38.40 level, I'd like to see that defended. If not, then the 38.25. Just because we've dipped down here, it might crush through, but that would be the level. Two levels I'd watch. 8.25 would be next after 38.40, and then a monster level is basically the 3800, 39.7 to 3800. So I would expect if we fell hard today, that would be it. But I don't see us falling hard today. In fact, at some point, I'd probably see a reversal. I think Europe's closed because of the Queen's funeral, so not much coming out of there today. Some housing stuff. We'll look at the economic calendar in a second, but that's my downside. 38.40 and then 38.25. Let's get back. Let's look at the hourly. So we had our dump, and then we consolidated. And I remember I was like, well, are we going to consolidate and pop up or come down? Well, it decided it was going to be sad. So we're kind of grinding down. These pivots are pretty decent today. 38.34. We're just below S1 at 38.68. Your pivot's 38.86. That's a good pivot too. I mean, I want to see anything above 95, but we could use that as well. 38 or 39.20 and then up here. So we'll see. Here's a daily aspect. Again, trend line still well defined. 200 days at 42.56. You had your 50 100 cross. Some people play that. If you did that, you got wrecked. So that's why I just watch these crosses. I'm just kind of holding these just for levels. So 47 and 40.12, or 40.47, excuse me. So volume node wise, you can see here that this this is your 38.30, so that's at 38.25 level basically, and a huge spike at the 37.93 level. That's basically your that 3800 level that I'd be watching. Again, I want to see it back above 905, 907 to come back into this volume void into the next up here to 41. Again, 4070 to 4170 was a huge range. So that would be something like a decent upside target for macro. Again, there's nothing bullish right now that I can find, but don't jump all on the bear bandwagon either, because that's how people get wrecked. So I guess today I'm opening up today cautiously bearish unless there's a reversal, unless we get over that 40.05, 40.07 level. Here's our month or quarterly. Again, end of this month ends the quarter. So this candle is definitely an inside candle, but we're going to look at how bad it closes. God forbid we close this below that quarterly low of 36.37. That would be sad. Let's go currencies. Oh, cash gap. Cash gap from Friday, 39.01, 38.80, or basically 38.81. So I would look for 38.81 to be resistance as well if we pop back up. We got into this cash gap and didn't fill, so 38.29 would be the low end on that one. And then 38.17 to 37.90 would be this one. I don't see this one 17 to 07. I don't see that one at all. But this one could be played with. Again, I don't know. I can't see them making major moves today prior to the Fed, but that's just me. 39.95 or 0995 ES still holding. So that is, again, if that level, as long as that level holds, I'm not completely end of the world for Europe. And then we've brought up the Japanese yen chart as well. So this is dollar yen. So this is showing dollar strength, and the target on this one really is 150, but above 42 was bullish. So this is basically watching the yen. So on a currency aspect, 143 yen or dollar versus yen is really sad for the yen. That would be like, your euro down at in the 60s level, basically, putting more like the 70s level, putting the dollar up at 140. So versus the euro, but this is a huge contract. This is not. But this is something that you should be watching. Joey, said something the other day, and I was like, oh, yeah, I should probably. I mean, I've been watching it, but I haven't been talking about it. So I've kind of put both these up on my screens to keep an eye. Dollar's got relative strength today. I think it's nipping at the 110, if not above it now. So stuff to keep in mind. If the Fed does hike a dollar, euro will definitely break this 995 level. Again, macro-wise, I'm really looking at 95, and if they lose that 95 level, that would be bad, and that would be about 115 on the DXY on the dollar index. This is just for grins. We're kind of watching the yen just implode basically. So a lot of macro going on. Here's our. We've got home builders index. We'll see how that works. Building permits, housing starts tomorrow. So a lot of housing in the beginning, and then we have existing home sales on Wednesday, along with the Fed and Jay Powell and his conference. So we'll watch this. This is going to be your big day today, or this week is the 21st. So a lot can happen in between there, a lot of shenanigans. So we're going to see a lot of news, and I don't know. The market aspect of this, from a swinging, we've seen intraday swings, is going to continue. This market structure is not going to change probably until next month, or maybe post-Fed. Maybe once we get this out, that rate hike, then we can see some settling, or maybe a clear direction of a grind up or a grind down. But this is really, these swings are killing people. So stay tight, stay vigilant, maybe half your size. But definitely, if you see it, take it, because it's not doing anybody any favors and with these swings. I think your 3 minute now, we're popping back up, so up above 65. But again, until we get above 905, yes, I remain in a bearish state. So stay safe, happy Monday, and I should be around all day.